Guys, welcome to What is the Dow Jones? Guys, this episode could have easily been called How Do I Base Jump Off a Cliff? That was a joke. Okay, the reason we're going over what is the Dow Jones is because the Dow Jones is about to go into a bear market. A bear market is considered in a market whenever a stock or index, or whenever an index fund like the Dow Jones is 20% below its peak, its all-time high, basically. All right, so Dow Jones is entering a bear market. So what does that mean for us? For most of us, it means a buying opportunity at a 20% discount. For others, that means that we have the bears are going to come out and they're going to want to see more blood. They're going to want to see this stock bleed a little bit more. They're going to try to push it to 25, negative 25, negative 30. They're going to try to drop this thing. They may be wanting to drop it down to Dow 20. We see Dow 20 again. But for most of us, dollar cost averaging, this doesn't really matter. But let's get into what is the Dow. This article is written by Jack Kramer and Nick Martell. The definition of the Dow is, it was born in 1896. The Dow Jones Industrial Average, aka the Dow, is an index of 30 big and prestigious public companies, and it is used to measure the stock market in general. Lots of people like to use the Dow. I personally like to use the S&P 500, but here are some companies that are actually in the Dow: Apple, Coca-Cola, IBM, Boeing, Disney, Intel, Caterpillar, Dow Chemical, McDonald's, Chevron, Exxon, Merck, Cisco, Goldman Sachs, Walmart, Microsoft, Office Depot, Walgreens, Nike, United Health, 3M, Pfizer, Verizon, United Technologies, Procter & Gamble, Visa, Johnson & Johnson, American Express, Travelers Company, and JP Morgan. Okay, here is the indice broken down by its sectors. So the highest sector is going to be industrial, so I'm guessing that's where it gets its name, Industrial Average. But there's a lot of information technology, finance, healthcare, consumer discrepancy. There's a whole lot of things to go into this. So let's go down to understanding the Dow. Some stocks go up, some go down. But how did the market do generally? Index group together a particular set of stocks so you can get a quick sense of the market movement. Created in 1896 by Charles Dow and Edward Jones, the Dow is made up of 30 large, aka blue chip, U.S. companies, which are picked from time to time by a selection committee. The 30 tend to be big, profitable, and have large track records as publicly traded companies. The index is calculated using a weighted average of the 30 stock prices. When people say markets were up, they are often referring to the Dow. And that's a preference. When I'm saying the market's up, I'm talking about the S&P 500. That's a fun fact. Example, from October 2007 to March 2009, the Dow fell by 54%. The financial crisis and Great Recession caused stocks to fall, including companies tracked in the Dow index, like McDonald's in food, Merck in pharmaceuticals, and Microsoft in software. And those are just the M's. Takeaways. Getting selected to the Dow is an honor. The Dow's 30 companies are some of the most prestigious and well-known brands in the United States. Investors look to the Dow to learn how markets are doing in general. But since the Dow is price weighted, it is less useful scoreboard than the S&P 500, which is value weighted by a company's market capitalization. The Dow also only reflects 30 companies, so shouldn't be used to assess the broad stock market. Guys, what do you think about the Dow Jones? What do you think about base jumping? Kidding. Guys, like, subscribe for more information like this on the stock market and what's going on in the market. Guys, let me know if this was interesting to you to know this little history about the Dow Jones. Like, subscribe, and I guess I'll see you all later.